All right, what is going on, guys? Welcome back to a new video. So, I wanted to quickly talk about a few things that I look at when investing, and also a little story for you guys. When I first invested into my first stock, which was, I think it was 2020 or 2021, my first stock investment, I lost money. A lot of money, actually. I lost probably $20,000. And just like everyone else, when I invested into my first stock, I didn't look at anything. I didn't look at the company's earnings. I didn't look at who's running the company. I didn't really look at anything. And I think 90% of people that are investing right now pretty much do the same thing. They don't look at anything. They just buy because someone told them to buy. And that's fine. Like that's exactly what I did. And that's also exactly why I lost money. So it's probably not the best thing to do, but my first investment was Gap, right? Probably before this, I'm sure I bought Tesla, made money, and all these other random little stocks, but bought it right here. And then it went all the way down to here, and then I ended up selling somewhere around like 20 something dollars. And I think the mistake I made was probably not doing a max view at the chart to help me gauge where its peak were, like basically where the peaks were over its span of its inception, and when it started. I think if I would have done that, I probably would have had a much better idea as to when I should invest. And this has helped me with most, if not all, of my investments. And I feel like that's why I've bought, like that's what I feel like that's why I've made money on majority of my investments, because I personally think you make money when you buy, right? If you buy low enough, you have enough margin for error, right? If the stock keeps going down, you can buy more, and you won't lose as much. It ends up going up, you make money. So what I should have done realistically, number one, look at where the peak was, right? The stock has been around for a while. It's 40, went down to 10, went up to 40, went down to 15, went up to 30, and went down to 10, went up to 30, went down to 10. Now it's up at 20, right? So I genuinely think I should have looked at a chart. Where was its peak? Number one. Number two, I should have looked into the company as a whole, right? The only reason I bought it was because I liked the company Gap. I used to shop there. This brings me to UNH, which is a company I invested into, which I'm sure a lot of you guys invested into as well if you're watching this video. I did the same exact thing, like essentially just looked at the chart. What's the 5-year chart or the max chart? And have the fundamentals of the company changed whatsoever within this company? And this is actually a conversation I had with someone the other day. They said, well, why did you buy UNH? The CEO got shot. Like, isn't the company going to go under? Like, isn't something going to happen with the company? And the answer is no. What is going to happen with the company? The management changed. The CEO got shot, which is very unfortunate. But if we look at the last 5 years, even in 2020, this went all the way down to 237. Even if we go back 5 years ago, it was never that low. If we go max, the last time it was 237 was 2018, right? That was 7 years ago. So 7 years ago, it was 237. Now, that doesn't mean you have to catch it at 237, right? And you would have made money. I bought it more closer to 300, and I still made 25%. I haven't sold yet. All you had to do as the stock was dropping, which I think 90% of people probably would know of doing this, is if you just hit this right here, you come to financials, you just go to annual, and we go for the last 5 years, 4 years. Let's just take a look at the financials. 2020, 257, 2021, 287, 324, 371, 400. Has the stock like made less money in the last 5 years? Have their earnings went down? No. So why are people selling? Simply because I personally think, well, I think it's the truth, the fear of the unknown. People just don't know what's going to happen with a new CEO. And even if you go to quarterly, their numbers are pretty much still up every single quarter. right? It hasn't changed. And so if the fundamentals haven't changed, why would the stock not go back up after it has its drop? Now, obviously, we don't know when it's going to stop dropping, because if we look at a company like Lululemon, I think the fundamentals definitely have changed for that company. And it just kept dropping. And like, people thought it would stop dropping, right here. Nope, kept dropping, kept dropping, kept dropping. And if we come into their financials right here and we go to quarterly, they're actually going down. So if we look at October, 2.4, 3.6, 2.37, 2.5. Now annually it's up, but quarterly it's down. So it's not growing as a stock, Lululemon as a whole. But UNH, their numbers are going up. The only difference is that they had, the situation that they had, and the stock went up. So point of this video is that when certain stocks go down for really no reason whatsoever, like the fundamentals of the company haven't changed. Obviously there was a change in, like I said, management, like someone got shot, someone got killed. So that could make people very fearful, right? Who's going to run the company? Is the next person going to run the company to the ground? But the fact of the matter is UNH has 150 million customers or members. And you really kind of have to think about it from, will 150 million people suddenly disappear because the CEO is now gone? Probably not. Will a couple million, maybe 10 million, maybe, but it doesn't make much of a difference to the company. Like, the company is too big at that point. And so the fundamentals of the company itself have not changed. The stock is down simply because people are selling it for less than, I guess, what it's worth. Your job in this situation is have a little bit of courage, buy it when it's lower. And obviously you're not going to know when it's going to go to the bottom, but buy it when it's lower. And then as it goes up, you could sell it, or you can just hold it. And if we look at the chart right here, it's sliced in half. One thing you could have done, typically what I do, is when a company keeps dropping and dropping and dropping, I don't buy it until it rises anywhere from typically 10% in that price. So once it hits its bottom, and I don't know what its bottom is going to be, once it goes up 10%, that's when I start to buy, because that's when I'm like, all right, the stock is going to get some more momentum. It's probably going to keep going up from there. So I didn't even buy right here. I bought it 10% above here. Probably actually a little bit even more than 10%, which is something I got from a book, Steven Schwarzman's book from Blackstone, right? So I just use that, right? If a stock is beaten down and keeps going down, when do you buy it, right? I typically buy it when it has a little 10% jump in price. Kind of gives me an idea for there's going to be a little bit more momentum coming, and the consensus is probably going to change for people, because at the end of the day, to kind of close off this video, people are what drives stock prices up and what drives stock prices down. I know it sounds like very basic, but I think a lot of people forget that you're trading amongst other people, right? I mean, I guess you could say some of it could be computerized, but for the most part, it's people at the end of the day. And if people's perception, whether it's true or not, changes, will help in your favor, right? If a stock goes up 10%, investors' perception is going to be a little bit more positive, right? They might change their mind. They might be like, maybe the fundamentals really didn't change in this company. Maybe the stock might keep going up. And the same is vice versa. So a lot of it also is, what I've noticed, is perception, investor perception. That's a big thing. Nothing can change in the company, but if there's some fear around something within that company, at the end of the day, people are trading the company, right? People have emotions, people have fear, people also have greed. So play to that, I think, in your in your favor in however you want to do it. But keep that in mind at the end of the day. Investor perception matters, and you can bank off of their greed when the stock goes up, and you can also do well on their fear when the stock goes down and there's no basis for it. So that's that. Thank you for watching today's video. I hope you enjoyed it. Give it a big thumbs up, and I'll see you guys for the next one. Peace.